Hey guys, what's going on? Jeb here and welcome back. In today's video, I am going to be sharing with you exactly why I believe that Bitcoin is about to rally back up to $100,000. We have two major prevailing theories that are competing right now about what is driving the Bitcoin market. In one case, we have a large cohort of the audience that thinks that Bitcoin is about to go into a four-year halving cycle bear market, which could drop Bitcoin down towards $50,000 towards the second half of last year, towards next year. We also have the other half of the equation, which are people that believe that we're about to go into a super cycle, that the days of five-digit Bitcoin are numbered, and that you're going to see Bitcoin moving up towards $200,000 to $250,000 at some point in the next year. Both of those theories point to a rally in the short term back to $100,000. So today, I'm going to prove to you with technicals why this is the most likely movement that Bitcoin is going to take here in the month of December, and then we can also talk about whether or not it will be a dead cat bounce moving in to 2026. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, make sure to sign up for Femex, who has gone ahead and sponsored this video. So big thanks to them. Let's get started. As you guys know, Bitcoin right now is following the exact same pattern that we see every single time that we begin a bear market. And this market that we're in right now is very much analogous to this market that we saw back here at the end of the last four-year halving cycle, where Bitcoin crashed from $67,000 down to $32,000. There are a great number of similarities here. The first one is that Bitcoin went through a large correction down to the 100 weekly moving average. At this point in time, on the 24th of January, the 100 weekly moving average was sitting at $31,600. Bitcoin found a bottom $1,300 above that at $32,900. As you can see, we have fallen back down to that exact same moving average after breaking below the 50. Something to note is that Bitcoin essentially never breaks below the 50 moving average during a bull market. The only time that we've seen Bitcoin break below the 50 moving average in over a decade during a bull market was during the COVID-19 pandemic. This is a black swan event, something that is unpredictable and something that does not necessarily change the efficacy of any certain technical indicator. Other than the COVID-19 pandemic beginning, which was one of the most disruptive events of the entire 21st century, Bitcoin has held above the 50 weekly moving average at every single point in the last 10 years. That has been in a bull market. Every other time that we've dropped below the 50 weekly moving average, here and here, we've gone into a four-year halving cycle bear market. So let's talk about what Bitcoin does next. Well, if you look back to this point in time in January of 2022, we were doing live analysis on all of this at the time. If you look back to this market right here, when Bitcoin dropped from 69,000 down to 33,000, Bitcoin found itself, importantly, under a very steep downtrend. This downtrend governed this entire correction, and we also saw that Bitcoin was below the 50 and below the 100 during the entire time. Bitcoin would go through a major bounce here, up from a low of 32,000, up to 45,000. This was a very large bounce. It was a bounce of almost $13,000, and on the Fibonacci, it was a bounce almost back up here to the 0.5, which was at 47,000. Many of us believe that this might be the beginning of a super cycle at that point in time. But of course, we have to remember, and we don't want to make the same mistakes of the past, that the trend is our friend until it ends, and that's not what happened. Instead, after Bitcoin broke above this downtrend, we put in an underside overside test, which was phenomenal, but you can see the inclination of the uptrend that followed was much shallower than the inclination of the downtrend that immediately dropped us down to $31,000, $32,000 in the beginning. And when you go back out to the weekly chart, you know what happened. Bitcoin rallied up here, rejected off of the 50. And then we resumed a downtrend that matched the inclination of the original downtrend. We had two major downtrends during this bear market, both about the same size. This one really caught speed once Terra Luna collapsed right here on this candle right here around June of 2022. Luna collapsed, and that led to like $80 billion vanishing overnight. So that's why Bitcoin dropped even faster here. But you can see the inclination of the second leg of the first half of the bear market was the same inclination as the first one, and this was a dead cat bounce. In other words, it was a bear flag, and when you actually take the bear flag price target, you can see the Terra Luna collapse notwithstanding that it ended up giving us an almost perfect price target. You can see it was pointing down here towards about $23,000. We actually dropped down to $17,000 once again because of several tens of billions of dollars vanishing during the collapse of Luna, Do Kwon, all of this, and then very soon thereafter, right around the same time, we also saw Three Arrows Capital, Celsius, and many other lenders go belly up. And so that led to a market drop that the technicals weren't necessarily predicting. And so what we saw was that Bitcoin went through a dead cat bounce up to a major level of resistance. In this case, it rallied up to about 48,000. You could round that up to call it 50,000, to be totally honest with you. And then we saw the market drop to the same speed that it had dropped moving into the dead cat bounce. If you move back to our current market, it's doing the exact same thing. If you look on the 8-hour chart, just like we looked on the 8-hour chart in the last market, you can see that Bitcoin currently finds itself below, or it's breaking. It was below a very steep downtrend with a very sharp downward inclination. We broke through the 50 weekly, dropped back down to the 100. We're bouncing off of the 100, and so that gives us the 50 weekly moving average and about the 0.5 Fibonacci squarely in our sights. And it's interesting because if you'll recall, the first dead cat bounce of the last bear market, we rallied up to about 45 to 50%. We rallied up here to the 0.5, right, around 48,000. That's where we rallied to. Right now, which also happened to be where the 50 was. Right now, we see that the 50 weekly moving average is sitting here at 101,000, and of course the 0.5 Fibonacci is sitting here at 101,000, and the 50 weekly moving average is sitting here at 102. By both metrics, the super cycle theory, Bitcoin's going to rally to 100,000 because there's no bear market. That's what the super cycle theory would say. The 4-year halving cycle theory also says that we're moving up towards 100 to 102,000 to hit that 0.5 Fibonacci and also to hit the 50 weekly moving average. The question then comes, not are we going to 100? That's basically a foregone conclusion. It's like the easiest long in the history of Bitcoin. The question becomes, are we going to break through the 50 and go into a super cycle, or are we going to reject and go into a bear market? And so that's what we're really interested in trying to figure out on this channel, is not are we going to 100? That's pretty dang obvious, to be totally honest with you. Every single prevailing theory of our market right now points us in the direction of Bitcoin going to 100 to 102. We will most likely see a 6-figure Bitcoin again at some point very soon. That's like 90+% confidence that we're going to go up towards 100,000 at some point in the next probably 4 to 6 weeks. The question becomes, are we going to break it? And so I want to start gathering information to determine whether or not we're actually going to break through 100. And I think it comes down to the speed with which we can get there. If you'll remember to the last bear market starting, one of the ways that we saw Bitcoin collapse was because the rally back up to the 50 was so much weaker than the downtrend. Genuinely, sometimes it is as simple when you're looking at markets as saying the market dropped this fast and it only rallied that fast. That's all you need to tell who's stronger, the bulls and the bears. This was obviously a very strong bullish impulse, because if you just draw a line of best fit through it, remember back to math class, the line of best fit, if you just draw a line of best fit through this movement, you can see that it's very strong. But the problem was it wasn't as strong as the one before it. And then the next movement was down, right? Because you have this kind of falling over motion, this kind of like this almost suborbital curve that the market does. When it's gone too high, it comes back down to earth. It just bounces higher than where it started, right? Because we started here, we bounced there, and then we went higher. So that's where you start, when you zoom out, you start seeing that the entire market looks like a sine wave. You get into physics, you get into all this stuff. But the point is that we were able to see that this was not going to actually break and Bitcoin was not going to go higher. One, because of fundamentals. We were going into quantitative tightening. Quantitative tightening started right around here. We saw the war in Ukraine started right around here. So there were a lot of macroeconomic factors that were pointing Bitcoin to the downside also. And I think a lot of those factors we knew were coming in December of 2021 and January of 2022. For example, the war in Ukraine started right here, early January. We saw a major dive on the United States S&P 500, the stock market. We also saw, as I said, the quantitative tightening beginning. We knew that it was coming, and then when it started to peak right here and we started going into QT and QE ended, you can see that QT did not actually mark the top of the bull market. It marked the end of this recovery. You see, quantitative tightening started. As soon as it started, we had an announcement a few weeks earlier. That's when Bitcoin fell over, because we then knew that we were going into an easing environment. And this is part of the argument that supercycle purists will say, is that the last time we saw a bounce at the beginning of a bear market, we were entering into QT, a rolling off of the balance sheet, which was reducing the liquidity in the global economy. At this point in time, we're doing the exact opposite right at the exact same moment, exactly 4 years later. We're leaving QT, moving into QE. So people that are saying that we have a super cycle coming, they do have a lot of strong evidence. I just want to see it proven with Bitcoin getting above 102, knocking out liquidity at 107. Above 107, I am firmly a super cycle theorist. Below 107, I am firmly a 4-year halving cycle bear market theorist. And I'm going to wait and see, and then from there, I'll know what we're going to be doing for like the next 18 months after Bitcoin gets that test. But as I said, trying to predict what Bitcoin's going to do when it hits this pivotal moment, hitting that 0.5 Fibonacci retracement and also the 50 weekly moving average, we want to look at a couple of things. Number one, we want to look at the fundamental backing. background fundamentals at this time was a major war was starting. Right now, there's talks of war ending in Ukraine, right? There's talks of war starting in Venezuela. So if that breaks out, that could end up causing a massive crash with the global economy, which could end up doing the exact same thing that we saw 4 years ago. But if instead we don't see war with Venezuela, but we do see some peace talks continuing with the Ukraine, then that would likely lead to a bullish backdrop of geopolitics. If you start to see the money printer turn on, that would also be an indication that instead of rejecting at the 50, we might break it and go into super cycle. And also, bottom line, when looking at price action, we just want to see how steep the rally back to 100 is. You can see the rally here is very, very shallow. It was barely moving. It was very, very shallow. These were higher highs and they were higher lows, but they were not very significant higher highs and higher lows. So when it comes right down to it, and this is the entire point of the video, I want to see, quite simply, how quickly Bitcoin gets back to 100. I've already accepted that Bitcoin is going back to 100. I think that's extremely obvious. The question becomes, when we get back to 100, not when we get back to 100, but how quickly will we get there? If we shoot up there tomorrow, that's not this like dead cat bounce, super lame bounce like we saw at the beginning of the last bear market. That's a change of character that could indicate that 50 is going to break. And also, something else to be on the lookout for. January 15th, 2026. MSCI is going to be determining whether or not Strategy is going to be able to stay in major stock indices. They're going to be determining whether or not they are a fund and they should be excluded, or whether or not they are a stock and should be included. That is something that is going to be happening in about 40 days. And when you look at that last major rally that we saw here, the rally back up to the 50 weekly moving average from bottom to top took about 65 days. If you do see Bitcoin dragging its feet, and it takes 65 days to get back up to 100K, which is basically a foregone conclusion in my mind at this point, that would put us out towards January, right? That would put us out here into January. In other words, if Bitcoin takes its sweet time getting back up to $100,000, 65 days from the bottom is January 24th, right? Right here. If we look at exactly January 15th, that's only 55 days. Okay, so if Bitcoin takes a month and does this number to get back to 100, and then honestly, whether we go into a bear market or into a bull market could be determined completely by MSCI's ruling about how to classify Strategy. So you need to be watching the fundamentals, but you also need to be watching the charts to understand how those fundamentals and the timing of the news is going to impact what Bitcoin is going to do. I cannot tell you with confidence right now, while maintaining a principled approach to this market, whether or not 2026 is going to be a bullish year or a bearish year. I cannot tell you from a principled approach whether or not we are going into a bull market or a bear market yet, but I can tell you that the way that we touch and hit and hopefully break through the 50 weekly moving average will almost certainly give us all the confidence that we need to be extremely bullish or bearish in 2026. If we flatly reject off of 100, or God forbid, we never even get there in the first place, you're going to see at worst 40K, probably more like 50 to 60K as a bear market bottom sometime in the next half of next year. If you see Bitcoin rallying up to 100, and we're sitting right there below 100, and you get MSCI says Strategy is going to stay included, and you get this announcement that that we're going to see quantitative easing, and then we see a bunch of rate cuts, or the new I forgot his name, but Trump is basically hadn't quite confirmed who the new chair of the Fed's going to be, but we basically know who it is. He's very, very dovish. He wants to drop rates by like 2%, right? If we see all of that coming into fruition in January, that's where the powers that be are intentionally manipulating the market to allow Bitcoin to moonshot. You now have Bank of America recommending a 4% allocation. Vanguard is now allowing their clients to buy Bitcoin. So the super cycle theorists have a lot of the logic on their side. What they're saying makes a crap ton of sense. 2026 not being a bear market and being a really bullish year makes an enormous amount of fundamental, logical, rational sense, and I want to be on that side. You guys know for all of 2025, I've said 2026 is going to be a bullish year. But the second we broke below 94, to maintain my integrity and to be a principled analyst, which is what you guys asked me to do, you don't want me just being up here being a chart monkey, not knowing what I'm talking about. I've been doing this for 8 years. I'm going to do this the right way, or I'm not going to do it at all. For me to be a purist to my principles and to integrity and to be honest with you, I have to say the 4-year halving cycle, bear market, is in full swing until that 50 is broken. But if that 50 weekly moving average is broken, if we hit the liquidity cluster up at 107, because there's a bunch of short liquidations sitting up there at 107. If you hit that, rocket fuel, we're going right back to all-time high. That would obviously invalidate the 4-year halving cycle. So yeah, I mean, basically, without rambling and wasting any more of your time, it comes down to this. We're almost certainly, like 90+% confidence, going to $100,000 within the next 30 days. That is our current prediction. After that, I need to see what that test is going to look like. So that is our current stance. It has been our stance for over a week and a half. We are going to $100,000. I have extreme confidence in that. From that point in time, whether or not we are able to break through $100,000 is going to determine basically all of what 2026 is going to look like. If you enjoyed today's video, make sure to hit that like button and subscribe to the channel, but also make sure, if you haven't already, to sign up for Femex. I'm going to tell you a couple of reasons why you absolutely should. First and foremost is I'm going to give you something for free. I'm working on a really cool trading course right now. We've had a lot of health stuff going on, so it's been delayed a little bit. I'm really sorry. We've been in the hospital a lot. But I'm working on a trading course with all this analysis that I've learned over the years and have been teaching you here on the channel. And in this trading course, I'm going to teach you how to use the analysis that you're learning from me here on YouTube to actually trade and make money in the markets. I've talked about how it's a really obvious long back up to 100K. I've also talked about how if you bring a principled approach to trading, you can actually make it consistently profitable without treating the exchange like a casino. I have no interest in you gambling. I want you to actually make consistent profits in the market. So if you've not already, make sure to sign up for Femex. The link is in the description box down below. When you sign up for Femex and deposit and trade $100, we are going to give you this course that I'm working on for free when it comes out. So that deal is available to any of you guys that sign up right now. When that course comes out, you're going to get it for free, straight through Teachable, and it's going to teach you some really amazing, it's going to be a great toolkit to get you started trading in the Bitcoin and cryptocurrency space. So make sure you sign up for Femex with the link in the description box down below. Femex needs no introduction, but I'll go ahead and tell you anyway. They're one of the largest cryptocurrency exchanges in the game. If you come over here to CoinMarketCap, go to Spot. Femex is a massive, massive exchange with tons and tons and tons of liquidity. And so, I mean, when you look at Femex, they are just a phenomenal cryptocurrency exchange. Let me go ahead and look them up. I don't know why they're not in this list. They're a lot higher than that. Let's look up Femex, the exchange here. You can see they've got $11 billion in assets, over $600 million in 24-hour trading volume. They're 100% backed. These are their financial reserves. Literally every single thing on platform. They have $11 billion worth of assets. It's all sitting right there in Tether. So they are completely safe. They've taken very good care of their customers. They are one of the only exchanges that didn't get threatened with a bunch of lawsuits after the 10/10 market crash because Femex operated correctly. They did not cause the crash on 10/10, and the exchange worked like a charm. The website itself was not laggy. It worked great. There were no wrongful liquidations. There were no stop losses not getting triggered because of a lack of liquidity. It's a very large exchange with very deep liquidity, has a great fee structure, and is overall a fantastic exchange. So if you have not already signed up for Femex, you're getting the best of both worlds. On the one hand, you're getting a free trading course from me, and on the other hand, you're getting access to a phenomenal cryptocurrency exchange where you will be very glad you are doing most of your trading. Again, if you enjoyed today's video, make sure to hit that like button, subscribe to the channel, stay tuned for more content. I love you so much, and tell me in the comments, do you think when we hit 100,000, we're going to break it and go into super cycle, or we're going to reject off of it and go into a bear market? I'd love to hear your thoughts on that in the comment section down below. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and being patient with me, because we've been, as I said, we've been in the hospital almost nonstop for the last month. I think we're getting to the tail end of that. We've got a lot of answers. All the testing and everything is clean so far. We're just trying to, get a lot of answers there for my wife. Bless her heart, she's not feeling well. So we're doing everything we can to bring stability to our family and bring her some peace and confidence and comfort for her health. So please be praying for my wife. So far, it seems like medically she's doing good, but we're still getting some more answers. So appreciate you guys being patient with me. Me being gone has had nothing to do with the market. It's been completely personal. So I thank you for your patience on that. And yeah, before I go, I do just first want to thank each and every single last one of you for watching, as always. And I will see you guys in the next video. Peace.